Hindalco's fantastic Q1 performance was largely on account of LME Aluminum prices, which have surged quite a bit. In fact, in the fourth quarter itself, Mr. Satish Pai had said that in Q1 prices are looking even stronger, and that's what we saw. Moreover, the hedging is well reduced, so further pass-through was witnessed in Hindalco's top line. Now, Mr. Pai says that he has seen LME prices reach $2,600 per ton in July because there's a lot of supply constraints being witnessed in the aluminium market, which is making the market very tight, which means that pricing could continue to remain strong going forward as well. He further says that, adding on to strength in Hindalco's numbers was the fact that the value-added products contribution was quite a bit, almost 27%, and he states Hindalco's intent to increase that to 600,000 ton. So almost doubling it. That's the target for value-added products. And at the end, they want to position Hindalco as a downstream player. Moving on to the copper business, though, the copper business did see quite a bit of a dip. The EBITDA was at 261 crore rupees. Remember, TCRCs have been a little weak, and the trigger behind TCRCs being weak is when LME copper rises. Furthermore, Satish Pai, the MD of Hindalco, says that we have any which ways been seeing reduction in copper concentrate supplies from Chile and Peru, which are key copper producing countries, copper mining countries. So he says that TCRCs are not going to go up in a hurry, and that does not exactly bode well for Hindalco's copper business. The other factor, of course, is cost. Cost inflation is coming. Satish Pai says that luckily in Q4 they did not see too much of cost pressure, but in Q1 COP has increased by by about 4%. But luckily, LME prices are very supportive, and that's the reason why he believes that margins will remain strong despite the cost inflation, which of course again is coming. But yeah, 37.5% is where the India aluminium margins were at, and Pai does not believe that that's a peak. In fact, it can at least sustain at these levels because LMEs are going up at a higher rate than costs. Now, US business, Novelis and Aleris, regional premiums in the US are surging. For Novelis, it's primarily benefiting in terms of scrap prices. But in terms of demand, he says that, Novelis was impacted primarily because of its exposure to the auto business. And, the auto business in turn was facing problems because of shortage of semiconductor chips. But luckily, Novelis has a good product mix. So, the other products, the beverage can business, for example, more than compensated for any sort of hit that Novelis did face due to the auto business seeing a semiconductor chip shortage. The aerospace business, he says, will recover, but it will take a couple of years to get back to pre-COVID levels. And finally, on the coal mill plant in China bit, which is a very watched out CAPEX, since there is going to be massive backward integration benefits, he says that it's on track and the synergies will be as high as $100 million.